Sorry, come on, go
Hello.
ahead.
It's okay, sir. Yeah. Abhishek ji, like one question always haunts me, or you can say bothers me in case of government companies particularly, right? चाहे वो डिफेंस हो चाहे वो रेलवेज हो, right? So that is like railways or even अपना shipbuilding companies always gets order from government, right? Basically, sans few companies which do take the export orders, but railway companies mostly take the these are like rights, IRFC, RBNL, something like that, right? So they always take orders from government, and how they ensure that their margins, their capital allocation, and then basically the payments, you can say trade receivables, right? They're insured on time and everything, right? So
So ठीक है, let's park this question. We'll address some of this during the presentation. Anything else from anyone?
नहीं,
so then yeah. So one thing more,
Hmm.
that is one thing, and other thing is that now how the government companies can be differentiated from the private companies, right? So uh, in what scale, like what the exclusivity of some private companies get from the government company, so that they can have the edge over the government company. So another question was that it is in general.
Yeah. So see, generally, if you look at private sector versus public sector, there is no, it's not that public sector companies are better or worse. You have to think about any company and how they do business. The problem with public sector companies usually is that the promoter most of the time has a different incentive for business, right? Because if I am running a business, I will have one objective of maybe, first looking at shareholder returns, which out, amongst which I am the biggest shareholder. That is how a promoter works, right?
Right.
So they will look at shareholder returns. They'll then maybe look at the longevity of the business key.
Business.
I should be able to run that business for next 30, 40, 50 years and pass it on to my children, etc. So these are the incentives that a private promoter has. Now the government may or may not have that kind of incentive. Their incentive could be that, okay, I want to uh, develop a particular region. That is why I am putting up a factory there.
Mhm.
It could be that I want to indigenize some technology from abroad, right? I want
Mhm.
to make India self-sufficient or at least more progressive in a particular technology area uh, by collaborating with some other government or some other agency outside. Right? So these are kind of and there is always that element uh, of
We can say
supporting.
social element, right? So
There is a
something like that.
large amount of social element, right? So
Right.
that is one of the bigger reasons why you cannot always equate a private limited company and a public limited company. uh, when we are going and investing in a public limited company or rather a PSU, not public limited, we are always investing in public limited companies, but whenever we are investing in a PSU, you have to keep that in mind that these are the drawbacks that we have, and because these are drawbacks, somewhere you might want to discount that factor, whether it is in valuations, whether it is in your allocation, etc., etc. So that is how you will have to play it. Or first of all, maybe the first decision has to be that whether you actually want to invest in a PSU or not.
Got your
So
point, yeah.
those are the factors. So in my opinion, you should never write off anything because of the ownership. If you are getting something which is very cheap, or if you are getting something where there is a lot of opportunity. See, one of the reasons why I am doing this railways presentation is increasingly over the last 6 months, 1 year, I'm getting this feeling, and we'll come to that when I start the presentation, is that this is a sector which definitely we need to look into. Whether we end up investing in it or not is a completely different ballgame. But to just say that because most of the players are publicly, PSUs, and I will not look at it, that I think is not the right approach.
Got your point, sir. Yeah.
Okay. Okay. So let us. I think it's 7 minutes past 10. So let's get started. I will. क्या हो गया? Let's see if I can only mute. I am muting everybody. Okay. Now I will have to unmute myself, or I am assuming that I am not muted. Okay, I am assuming I am not muted. Perfect. Okay, so let me get started. So first of all, thank you all for joining, and I've already started recording this, so should be available later. Uh, I'm assuming that all of you know something about me and what we do. Otherwise, you will probably not be here. But just for maybe the few of you who do not what know me or what I do, I'll just give you a very quick introduction. I am part of two. Just one second. If okay, just one second. Why is Pratik calling me? Pratik, what is this? Where are you calling me?
Just make it full screen presentation जो
हाँ ठीक है तो बोलो एक बार प्रेजेंटेशन को फुल स्क्रीन करना है बेटर
okay.
perfect so uh, basically I started investing in the year 2000 and what I was working in an IT company then, and I've been investing since 2000. Started off with very little amount of money, uh, and over the years I've tried different things. I've done a little bit of value investing, growth investing, momentum, technicals, quant. Uh, so you can say I am a little bit of a jack of all things, probably master of none. But what it has helped me over the years is to get a perspective of how the market works, how different businesses behave, and I try to understand businesses, try to understand industries, how people in different businesses uh, work over long periods of time. So that's been one of the things that I've been very interested to observe, right? So look at what individuals do over very long periods of time. So in 2019, I left my job after about 2 years of haggling with my family. They didn't want me to leave the job, and I was like, no, I don't want to continue anymore. So 2019, I left, and I started. I thought that I'll just invest for myself, and then I thought that if I'm doing this for myself, it's better to actually also uh, you know take others along with me, because naturally keeps happening is your friends, family, etc. keep coming and saying क्या stock लेना है बताओ, those kinds of things. And then I thought that just instead of giving random ideas to people, it's better to do in a more structured way. So I started intelsense.in. We started with just the long term portfolio. So basically a list of stocks where uh, we could buy and hold compounding kind of stock, for a set of stocks that we could buy and hold for 1 to 3 years, and then keep repeating if the business does well. So that's how we started. Then we also launched quant. We've two separate quant models. One is Q30 and Q10. Both are momentum based quant models. Reasonably high churn. We look at it on a weekly, monthly basis. Third we did was we did HitPix, which is based on Technofunda. So what Technofunda is, basically you're trying to make technicals and fundamentals together. roughly 2 to 6 months of hold period uh, for each stock. And then finally uh, we launched Quiver, which is only on small case, and this is slightly a combination of all the three of the above. So it uses mostly a trend following model. So anything that does well continues to be in the portfolio, and this is a very concentrated portfolio, 10 stocks only, and that's how we sort of approach. Then very recently, about 6 months back, we started with the PMS. The fund house name is Sri Rama Managers. We have two funds. One is Sri Lakshmi. Sri Lakshmi is in a long-term oriented fund, 15 to 20 stocks, and similar to maybe it's a slight fusion of long-term and hit picks. Uh, Nifty 500 is the benchmark that we have. And the second fund is Sri Vriddhi, which is more opportunistic in nature. So again, it's similar to Quant, HitPix, Quiver, a combination of these. And again, very concentrated, high churn, uh, and returns. Thankfully, uh, has been very good, at least in Vriddhi and in Lakshmi also. The first 6 months, both I think Nifty 500 has been up 4.3%. Lakshmi has been up 6.2 if I remember correctly, and Vriddhi has been up 15.5% the last 6 months. So performance wise, both have been doing reasonably well. Doesn't mean that this kind of performance will continue. We're trying to the expectation is we will try to do have consistent reasonable returns over a 3 to 5 year period. Okay, with that we'll start with the presentation for today. The mandatory disclosures. See, essentially what every disclosure is all about. One is it tells you that, boss, I have no onus on what I'm telling you. Second is that it's for educational purposes, etc., etc. But main thing is the last line that I have written here is, if you believe in this presentation and buy and sell any one of the stocks mentioned, it is your problem, right? So that is what, in a nutshell, is what every disclosure is all about. It is about people trying to protect their backside. See, the whole concept that I'm trying to share today is we will talk about railways as a sector. We will talk about a few stocks in that sector. It will not be an exhaustive discussion either on the sector or on the stocks that we choose. There could be other stocks which have exposure to the railways industry, and it's not there could be, there are a lot of other stocks, but we've tried to pick a set of stocks that I think are reasonably well entrenched in that ecosystem, and we will talk about some of them in that presentation, and you are free to take your uh, your own decisions based on that. My only input would be that use this as a starting point of your research process, that you want to read up more, you want to understand a particular stock better. So this is just to give you the broader context of why this is interesting and why we should look at it. Okay, so let's get started. So first of all, I think Indian Railways, nobody needs an introduction, right? I think there is no one here today who has not been, who's not traveled in Indian Railways. Right? I think all of us have traveled in Indian Railways over the years, and maybe some of the stuff that we don't know about is that Indian Railways is the fourth largest rail network in the world, and it covers nearly 70,000 kilometers, around 7,300 or 7,400 odd stations. The number of stations also are increasing as the years go by, because you're connecting more remote locations, you're building stations in between when the distances between stations are very large. The other thing is, you know, railways started off was created. The entire the rail network was created by the British, but since independence, the last 75 years, India has also put in a lot of work in multiple areas. One is in expanding the network, in converting the rails from meter gauge to broad gauge, in electrification, in safety, security, etc., etc. So a lot of work keeps happening. Unfortunately, because of our population and population density, you will always find that the demand for rail tickets are higher than the supply. And I think that is one huge opportunity uh, that is there in front of us over the next. And this is not a short term story; it's a long term story that is playing out slowly. And like in any infrastructure, especially related to the government, especially related to things where land needs to be procured, uh, it will take its own sweet time. We cannot think that, okay, in 2 years we will have a new railway station built and new rails. That is not going to happen. This is going to take many years for the entire change to be visible. Rails run across the length and breadth of the company of the country. Uh, Huge. If you look at the longest route, it's about 4,300 kilometers uh, from Kanyakumari to Dibrugarh. Uh, the other interesting part is if you look at the number of people that we carry. Daily we are carrying 24 million passengers, which is just an unbelievable number, right? 200 odd million tons of freight, and this freight is also going up every day. So what is happening is that the Indian government, and let me move to the next slide. You will see that what is happening is over the last few years, capex from private companies is not picking up, right? And this has been a perennial problem for India for a long time, and it is not happening since, probably, if I am not mistaken, since the global financial crisis. And just before that, from 2003 to 2008, there was huge amount of private capex which happened, and that uh, deleveraging is still continuing to happen. That balance sheet cleanup is still continuing to happen, and we can see that in infrastructure companies. You can see that in power companies, because huge amount of money had gone in, capacities were built in that phase. People who were there in the market at that time will realize or remember companies, how their stock prices jumped. Some stock prices went up 1,000, 2,000, 10,000%. Uh, but the fact of the matter is, for the last decade or 15 years, private capex is not picking up. So what is happening is that you are seeing that the government necessarily needs to put in money in terms of government capex for the economic engine to actually keep running. So interestingly, what has happened is, in the last 2 or 3 years that we've seen in this budget, usually what used to happen before, right? What we have been seeing from our childhoods is, whenever there is a crunch in our fiscal or in our budget, the first thing that used to get cut was spend on infrastructure, because it's the easiest thing to do, because you do a little bit of road repairs and basic maintenance and stuff, and all the actual capex you put on hold or you delay. Last 2 3 years we are seeing a deviation from that, where we are seeing that even with very uh, difficult fiscal situation with COVID and everything, the spend on infrastructure has not reduced. In fact, it has gone up. And my thesis is that with elections coming in 2024, it will not reduce in the next 2 years. Right? It will actually, probably, if not remain the same, it will actually go up. So that is one of the first assumptions that I have. One of the main thesis points is that the infrastructure spend is actually going to go up. Now, within the infrastructure spend that the government has, where can a government, you think about yourself as the government, and where would you go and spend? So you will spend on roads, you will spend on railways, you will spend on airports, you will spend on what else will you spend on? So roughly, I mean, the big areas of the spend are these: roads. Okay, power is a little bit where you have some spending. Uh, some parts in defense. Although I doubt if defense spending is going to go up significantly in terms of percentages of GDP. These are the main areas of spending which is going to impact a lot of lives. We are already seeing Nal Se Jal and those kinds of infrastructure related spending happening. Affordable housing, those affordable housing kind of policies are being rolled out again. These are all part of building infrastructure in both rural and urban areas. So the but broadly in terms of the big bucket, the biggest areas would be roads, railways, and primarily roads and railways is what you would look at in terms of spending the money if you were the government. So, in a nutshell, government capex is increasing, and railways will have by far the highest share in this movement. Now, here, so we have allocated this large pool of money to railways. Now, within that, where will I spend the money? So, there are two main things which are happening in the railways broadly if you want to understand. First thing is, I want to speed up the railway movement. So I want people to get from point A to point B faster and safer. So these two are very important. I want people to go faster and safer. And the second aspect is I want more and more freight to be carried by the railways. Okay. These are the two broad contours of policy making that is happening. And that is why you will see that doubling of lines, creation of new lines, multi-tracking are the areas which more or less between them are covering 65 to 70% of the overall spend. Okay. Other than that, you have locomotives, wagons, those parts, but those are much smaller in terms of allocation. The biggest allocation is doubling of lines. What does that do? It increases my capacity. Right? Creating new lines. What does that do? Most of the time, creating new lines is creating new capacity, and or it is actually there to increase the speed. So, just as an example, the new Vande Bharat trains that are running, right? The newest I think was launched. I forget between Chennai and Bangalore, if I'm not mistaken. Right now, it's running maybe 20 minutes faster than the existing Shatabdi. Now, that is not what the objective of a Vande Bharat is. So, why is it only running 20 minutes faster? It's running 20 minutes faster because the train line that is there needs to be upgraded to cater to a faster running train. And that is now what is the next phase. So once that happens, you will see the Vande Bharat coaches are able to run significantly faster than the older coaches. Right? So that is what is slowly going to happen over a period of time. Is you will see more and more new lines getting new tracks getting relayed, so that the speed of the trains start picking up significantly. Then that's the first part, and the other part is you will go to the uh, dedicated freight corridors. You will have a large amount of spend in electronic signaling, data management. So previously, if you remember, every time a train used to pass a signal, right, or a check post signals, they used to manually track down. All those systems have now got completely wiped out. There's no manual system anymore. Right now, uh, all of it is automated. So this is what I was basically talking about. So what are the broad contours of where the movements are? Infrastructure building is something which is very important. The plan is to have 400 new Vande Bharat trains, obviously over a longer period of time. Now, any government projection, I would always tend to take with a pinch of salt, because uh, it's like any corporate also, right? When the management uh, gives you a vision statement, that vision statement is not only for the clients or for the shareholders, it is also for the employees, to boost them up, or to say that, boss, this is your target. Not necessarily that those targets will be achieved in the time frame that they're talking about. So my take is, even if 50% is done, 60% is done, 70% is done, then we are much better off than where we started. So one is the infrastructure building in terms of new trains, new stations, relaying of new tracks, and etc. So that's one part of the work that is getting done. The second part that I said, which is equally important, probably more important for the railways, is the freight traffic, because freight brings in the most amount of revenues. It went off my mind in terms of the percentage of how much revenues actually freight brings in, but let me not hazard a guess. It just gone off out of my mind. But freight is where railways makes its money, right? So these new Gati Shakti cargo terminals, the dedicated freight corridors, all of these are coming up. They are getting catering to this particular problem of moving large amount of freight from roadways or from waterways to rail, because rail obviously will give you the one of the cheapest options. Very interestingly, I just read in one of the stuff that I was reading, that Hyundai Motors actually uh, delivered, I think, 150, 125 or 150 of their cars to Nepal using railways. Right, this is the first time this happened, and so I found it very interesting that, okay, now we are exporting to our neighboring countries using our rail network. So probably, closest to the Nepal border, and then they would have taken it by roadway or something like that. But this is something I found very interesting. Okay. Uh, the next part is safety modernization. Again, lot of work is going on in these areas. The Kavach program, the Gati Raftar, which under which is now probably come under the Raftar policy, basically increasing speed with more safety. So you have anti-collision systems being brought in, overall train management systems being brought in, a lot of these, and also modernization in terms of the look and feel, increased customer, or I don't know whether we can call ourselves customers or what. Uh, Okay, so Pratik is telling me that freight is 75% share of the revenue. Yes, that's what I was thinking, 25% and 75%. So freight comes with 75% of the, I mean, freight gives 75% of revenues for Indian Railways. So coming back to what we were doing in terms of uh, modernization of railway stations. In fact, I was in I think Howrah station some time back. Very nice public-private waiting rooms that has been created, all AC. Uh, Pretty nice. I mean, you're charging I think 50-60 rupees for an hour to go and sit inside. Uh, if I remember correctly. So something which is very interesting, which is happening. Lot of uh, solar power deployment is happening so that stations etc. become more green. Uh, One second, I'll have to shut down this. So then we have a lot of PPP projects that are happening where we are connecting ports. So connect last mile connectivity between airports and railways, ports and railways. So those kinds of connectivity is getting set up. Already, I think there has been approval for connecting seven ports to the nearest railway tracks. So these kinds of work that is happening. Again, a lot of work with in the PPP mode about you might have heard of the Railopolis schemes, right? So a large number of old stations are getting remodeled. Uh, you know, infrastructure is getting created a lot like uh, a lot like I'm just forgetting the name. I think there was one in Bombay which was being discussed. Then the last one is metros. So metro is are just fantastic in terms of the kind of penetration that they are putting up across the country. Now I've been in Calcutta, I think, where we are. Yeah, I Gaurav talking. I think the CST station is uh, where the modernization was supposed to happen or is planned to happen. There are multiple other stations. I think the plan is for 123 railway stations across the country. But even currently, when I'm seeing a lot of the existing stations, a lot of uh, incremental development which is happening. Okay. Okay. I'm just scrolling through the chat. I think Prakash ji, thanks for joining. Okay. Okay. So coming back to the presentation, metro again is fantastic. I've been in Calcutta, so oldest metro in India, and right now also a lot of incremental new lines, new routes are getting built. It's actually transformed over the years the way people commute, especially in Calcutta. I can vouch for it that if I have to go to central Calcutta, where parking is a big problem, I even today prefer actually taking the metro and going there. Uh, Nowadays, I think all the coaches are AC, so it's very convenient. Time is very less, very clean. Again, this is something that I've always wondered that the metro stations are absolutely spick and span. I've traveled across the world. Our metro stations are at par with probably anywhere else in the world. And the moment you come out of the metro stations, we see people spitting here and there and things like that. So the same people don't go and do the same thing inside the station. So that sort of, I think, tells me that if you have a clean place, people will not go and dirty that initially. Uh, Again, here is just a snapshot of what is happening in the metro. space in the rapid transport space, and I think this is just this is just one place where we are getting started, and I think this is going to see huge amount of traction over the next 10-20 years. Like a lot of our cities will have metros. I still remember when people were talking about metros in smaller cities and towns. The first thing that people used to ask is why does a small town need a metro? But I don't think anybody talks about it now. It's taken for granted that we will have metros. A lot of I think Delhi Metro is just fantastic. I've used it. Calcutta Metro, very good. Bangalore, wonderful. What we need is more of that, more the network to be more diversified uh, across the cities to cater to larger amount of traffic. Broadly, what I'm trying to now tell you is that these are the broad areas of focus for the railways. Now, this is I was watching this program. I urge you all to watch. There's this program on you can find that this on YouTube. There's this series of programs called Economic Sutra, and very nice. I mean, they talk about this one was about the Indian Railways, and the program actually takes you through the newest developments. For example, it took you into the a train driver's coach, right, where he says what does he look at, uh, and that's something that we'll never get to see as common people, right? So it's wonderful. And so uh, this particular center is, I think, in Prayagraj, and the whole idea is that all the manual uh, data logging, etc., is now all gone, right? If now everything is logged by sensors, by electronics, and all of it is electronic, so you can the entire control center is managed through dashboards and things like that. So a large amount of modernization is happening. Some of it may be slow. We may perceive that okay, it could be done faster. Definitely, everything can be done faster, better, nicer. But as long as the trend is towards getting better, I think that's always one step forward. The rail ministry actually has a very active Twitter feed, and you will see continuous updates from the railway ministry in terms of what is happening. So if you are interested in the space, I will request you to follow the Railmin India Twitter handle. And I've just given you some snapshots here. So just tells you, it gives you numbers in terms of what has been achieved, what is the progress, and you can see that there is in earnest a lot of execution which is happening, right? Whether it's locomotive production, whether it is in terms of coach production, automobile loading, coal loading, etc. Every aspect you will find that things uh, are picking up. So that is the key takeaway, right? Okay, so now we will go to the next section where we talk a little bit about some of the interesting companies. Again, like I said, uh, we will not go very in depth into any one of these. We'll just give an overview of these companies. Uh, these are not buy sell recommendations. Uh, these are definitely worth looking at if you are interested in the space. And this is not an exhaustive list. There are other companies which are suppliers to the Indian Railways, and you can definitely look at them as well. The only one where this in this particular thing that you will see is probably KEC, which might you might think that why is it here and why is IRCTC not here? Uh, so we'll come to that. As I said, not covering all the companies that are there in this particular space. Okay. So the first one, obviously, this has been a perennial favorite. I think when we used to have for people who've been in the markets for a while, if you remember, when we used to have the rail budget, Titagar Wagons was one company which we always used to run up before a month before the rail budget. This is pretty much a rail budget stock. Okay. So, what does Titagar Wagons do? Primarily, as the name suggests, they make they make high-speed wagons. They make coaches, locomotives. So that's what they do, right? It's a Calcutta-based company. In fact, Titagar is actually a slightly it's just outside Calcutta, if I may put it that way. In fact, a couple of weeks back, I had gone there just before Diwali. I had gone uh, near Titagar, and while I was returning, uh, the road there's a rail line outside the factory, which if there's a new stock rollout, so basically it rolls out from the factory and goes to the nearest probably train shed or something like that. So we had to wait in that rail in that intersection for over 15 minutes because the a new train was getting out of the factory. So this is one of the largest companies in terms of in the railway space. They have over 30% market share in railway wagons. Right? Roughly 75% of their revenues come from Indian Railways, and 25% comes from Italy, where they have a setup. What's happening is that there is a lot of order flow which has happened. If you see, the order size recently has been about 7,800 crores. And in a nutshell, because what we talked about earlier, there is a lot of uh, focus and traction in building newer wagons, building newer coaches, and that is why a company like Titagar Wagons is in this overall is prominent in the overall scheme of things. Valuations are again reasonable. Market cap to sales is less than 1. Price to book is about 2. So overall, in a nutshell, look interesting. Major risk areas I would see, which is again consistent for all the stocks that we will talk about here, is that because this is into heavy manufacturing, it requires a lot of working capital. The biggest concentration is client concentration risk. You are supplying to only one large client, is the Indian Railways, and most of the time there is a very well defined tendering process, payment process. All of that is very well defined, and these guys have been doing it for very long. So uh, probably no risk in terms of not getting paid, but in terms of your execution being in time, your ability to uh, pass on raw material price increases, reductions, etc., is all very limited. Okay, and the second thing is now, because these are government projects, everything is happening with competitive bidding. So companies which, so there's cutthroat competition. And let me just go over 1 second to the next slide. We'll see Texmaco, we'll see Jupiter Wagons. So all of these guys are more or less doing similar kind of stuff, and you will find that so Titagar Wagons, all of these guys are now trying to do other than wagons. So can we do something slightly different? So uh, they have Titagar Wagons is now working with the Coast Guard along with Garden Ridge Shipbuilders to create uh, warship vessels, etc. So their core competency is in engineering, in construction of railway related stuff. And can they take that and use it somewhere else? That's what they're trying to do. Okay. Other avenues obviously are going to be metro coaches and stuff like that. So this is one area. If I look at so this is the monthly chart. I'm also going to take you a little bit just to give you a glimpse of how the stock prices have moved for each of these companies. This is the monthly chart. You will see that uh, the stock has gone up, gone down, then moved up, and right now it is poised pretty much at close to all-time highs, give or take a few rupees here and there. But the structure of the chart is that it's now back to uh, levels where it has never been before, and how it will play out in the future is something that we have to keep monitoring. Will it mean revert? Will it fall from here? Or will it actually take out this previous highs and make new highs? So that's one. Next, we have Texmaco. Okay, again another rail budget special stock that we used to have. Very very old company, been in business quite a number of years. Okay, here the interesting part is that they've been growing uh, the business consistently over a long period of time. Again, if you see the order book, very large order book. What we saw in Titagarh here as well, the order book is roughly 4x their current revenue. What else is interesting here? Again, valuations are not very demanding. Uh, just 1 second. Okay. So, what else is interesting here in Texmaco? Pretty much, I think it covers most of the stuff that I've already talked about. Uh, Nothing very different. So, more or less, their split of the work that they are doing is rolling stock is 40%. The EPC that they do is about 40% again, and 20% comes from their steel foundry. Okay. Texmaco, if you see over the years, it's corrected significantly between 2014-15 to 2020. Around post COVID, I think it started picking up. Now you have to see whether it goes back from these 50 odd levels to its previous highs, which is close to 150. Right? So this is again price trend where it clearly shows that it's sort of creating a bottom probably and ready to move upwards. The next one is Jupiter Wagons. This is a company which basically came into being with the acquisition of Sepco. I mean, it was there before. They acquired Sepco, and that's how they got listed. Uh, they are very well entrenched in the wagon space. They are also doing a lot of interesting things in terms of different types of wagons. Uh, they are working on passenger coaches, all the newer generation coaches, uh, modular toilet systems, all of these kinds of things, passenger coaches, heavy uh, containers. Again, this, if I'm not mistaken, the headquarters of this company is also in Calcutta. Uh, 70% of the business, again, like Titagarh, it comes from wagon building. Here you will see again a very long. First of all, this fall on the left in 2013, I think, was because of a corporate governance issue that happened in SEPCO. And then SEPCO went sideways for a very long period of time. And recently, after I think Jupiter acquisition, etc., got completed, and the business started picking up again, the stock price has moved up again. If you see, very significantly. So from roughly 15, 20 odd levels, it's moved to close to 80. These are the primary players in the wagon, etc. space. I'm already 50 minutes in, so let me quickly go through. The next one is HBL. Again, this is a very interesting company because uh, they're, they primarily do two and a half things. One is they do batteries that go into defense applications, that go into backup systems, etc. And then, other than that, then look at the anti-collision systems and the train management system that is there. And in TCAS, they are one of the three approved vendors along with Kernex and Medha. And TMS, I think they are one of the only Indian players that is there right now. Very interesting company. Anti-collision systems. The more we get into higher speed trains, this is going to get more and more mandatory. They've started winning orders. I think last 6 months they've won uh, three major orders in the Kavach space, which is your anti-collision systems. Uh, in addition to that, their battery segment also works on defense. So the missiles, etc. So Agni missile has their batteries. Uh, Interestingly, I tweeted out yesterday the backup batteries for the Qatar World Cup that is going to happen in the stadiums for is supplied by them. A very interesting company. Again, disclosure: this is a stock that I personally hold. I've recommended. We hold it in the PMS and invested interest in this as of now. Okay, so this is again the monthly chart. You can see that over the years the stock has been sort of going up and down, and last 2 years it's done reasonably well. And the expectation is that as the business continues to do well, I think most of these companies that have a lot of traction in business terms should continue to do well. Okay. Next company is Rights. Again, a very interesting company. These are the Rights is basically a consulting company. Right? What they do is they help do consulting, they help do project management for the other players. So most of the time they will actually not go and do the work. right? So if somebody else is doing the construction, they will do the project management. They will do the inspections, quality inspections. One interesting aspect about this company is the dividend yield. Dividend yield is very, very healthy. Uh, Advantage of this company being in consulting is that they have a reasonably strong balance sheet, because you don't need a lot of capital, etc., to be deployed. They do consulting both in India as well as abroad. They export rolling stock abroad to Sri Lanka. If I remember correctly, I think Sri Lanka is not mentioned here, but I think one of their first things was to Sri Lanka, then Thailand, Indonesia, Malaysia, etc. So very interesting business. They also do a locomotive leasing. So let's say if you are a cement company, if you have a cement rail siding, you may not wish to buy. So is it? I think you want me to speak louder, or what is happening?
Yes, Radha, if you can be.
Okay.
Some people are getting a sound issue. So
Okay. So is this better? Okay. So just let me some. Okay. Okay. So Rights again, I think, is a very interesting company. It's been a company that I have advised or recommended to buy before, but right now again starting to look very interesting once more. Currently, I don't have a position, but it's beginning to look very interesting. The challenge is this: these kinds of companies. Okay, so I'll come to the generic or the general challenges for all of these slightly later. Uh, in Rights, if you see over the last maybe 2-3 years, the stock has gone sideways. Now it seems to have broken out of that range. You will have to give it some time to actually see whether it is broken out of that range or decisively, or whether it is going to come back into that range once more. If the business starts picking up, then hopefully it will be out of the range and continue to climb upwards. The next one is Ircon. Again, one of the largest players in terms of construction related to railways. So basically, they are the guys who do your tracks, your tunnels, bridges, all of those related to railways. Right? Let's say if there is a new factory to be built, they'll build the factory, they'll build the township around, they'll lay the uh, tracks, etc. Uh, then dividend yield here is extremely lucrative, 5% dividend yield. Order book again, 5.5% of 5.5 times of revenue. So in a nutshell, what you are seeing is that what we were discussing about the industry, there is a huge amount of traction in terms of order books, in terms of visibility of earnings over the next 2-3 years, maybe slightly longer. Again, Ircon stock has practically moved sideways since it's listed. It's happened. And then we have RVNL in capacity augmentation, electrifications, railway line setups, metro setups. This is a specialist company again. Uh, Again, extremely large order book again. 4x of revenues, attractive dividend yield of 3.5%. And most of these stocks are even today valued reasonably. It's not something which is where the valuations are out of whack. This has been reclassified as Navratna. Probably now it's a mini Ratna kind of thing. Good company. And you see, after it got listed, it's gone pretty much sideways with uh, looking for a breakout this particular month, where it's moved about 20% from 40 to 50. KEC. Now, KEC is not a very traditional railways player. So why do we have KEC here? Two reasons. One, if you see that the railway revenues was railways as a part of their revenues was 2% in FY16, and today it is 28%. That gives you an idea of the focus that KEC is now putting on railways. Right. So a lot of power T&D, uh, railway EPC, electrification work, all of this is something that KEC is focusing on. That is why I've included this in the railways presentation. Okay. They are currently executing large projects in metro depot projects in the Kochi metro. A lot of interesting work that they are doing, which is related to metro railways. They've also tied up with Kernex in, I think, the one of the latest bids for the TCAS implementation. This is again another player which is getting into the anti-collision space. Okay. Let me see what else is there. Again, KEC, you see that for a long period it consolidated, then it's moved up, down during COVID, and again back to more or less highs, consolidating around that place. So this is the last slide, and then let me stop sharing my screen. Yes. Okay, so I think I have taken 1 hour, which is what I had planned to do. And now let me see what are the questions that are there that I have missed. Okay, before I see the questions, a few things that we did not discuss. One is a couple of stocks like the financial companies that fund railways, IRCTC. Why are these companies not there? So basically, it could be there, but somehow I have a feeling that I'm not very keen on railway financial companies. I don't their balance sheets, etc., uh, not very pristine. And when I have to invest in financials, why would I look at only financials that tend to one particular sector? If I have to buy financials, I will buy financials which are uh, much more broadly diversified, have better risk management profiles, etc. So that is one of the reasons why you don't have financials which are focused on railways. IRCTC, I personally I get very confused because it is one which is most facing the customer. It is also most prone to disruption and intervention by the government through policy. Uh, someone suddenly decides that you cannot take booking charges, or you can take only x amount or x percentage. And your entire thesis of running the business gets very complicated. It is better to have maybe a Jupiter Wagons or those kinds of things, or a HBL or a KEC, where at least you know what you're getting into, and there is a possibility of sudden policy changes impacting your business is lower. Okay. So similarly, the couple of questions on Carnex. Carnex, I think the question mark is always right now is on the balance sheet. As and when the balance sheet can get repaired, definitely definitely take a look at Carnex as well. Right. What else is there? Let me just scroll up.
I think Dada, one question from Rudrodha was there. Do you have a view on the railway OPEX spends and the kind of AMCs, I think annual maintenance contracts he means, that would be awarded over the next 3 to 5 years? So
No, I didn't get the question. So basically, how much of money is going to be spent on AMCs?
we've talked about the railway capex. I mean, in our presentation. So he's wanting to know if there is a view on the railway OPEX. I mean, the operating expenditures that railway will be doing, and the kind of annual maintenance contracts that would be awarded over the next 3 to 5 years.
Okay, I don't have that number at the top of my head. Pratik, you remember?
Okay,
तो
so
we'll- हाँ, बताओ नहीं तो we'll get back.
yeah, we'll get back with the exact numbers for this. I mean, we haven't really, I mean, the focus was on the capex only for this presentation, so we don't have that number. But just to give an idea, I mean, the projects that are being implemented, say for the TCAS, I mean, some of the AMC tenders already been floated for the TCAS, which was already implemented. So those, I think, HBL and Medha are already participating also, the ones which I had sent you. And the other part of the OPEX is about the signaling systems we are getting upgraded, and different kinds of things with regards to the speed upgradation. So we'll be wanting that all these systems that are there, these have to be interlinked and connected. So therein, the operator who has set up the infrastructure, they'll be giving AMC contracts to them. So yeah, OPEX also will be a large part going forward.
No, OPEX is always a large part because whenever you are running such a large, uh, heavy industry, OPEX will definitely be a large part. But yeah, I mean, we were focusing more on the capex side, so definitely OPEX would also be something which is would be interesting to look at. So we'll definitely look at that. What other question was there? There's a question on is the promoter of HBL and Titagar different? Of course, they're different. Yeah, HBL is Dr. Prasad. Titagar is I think what
Umesh Chaudhary.
Umesh
I think
Chaudhary.
we
Yeah.
made a mistake in our slide. So
ऐसा
that
है
is
क्या?
why.
अच्छा अच्छा.
Okay.
Okay. Yeah. So this is Dr. Prasad is the promoter of HBL. Sorry about the mistake on the slide. What else? Let's see. I think that is the question that was there. Okay. So there are some people who raised their hands. So let's start taking questions from them. Okay. So let me see. Kamal. Okay, Kamal, let me unmute you. Yeah, Kamal, you can ask a question.
Yeah, one question that I asked in the start, like how these government companies maintains their margins, right? So how they ensure the payment can be done, right? So but because ultimately the orders are in the government hands. And another thing is in the communication space, I even asked in the chat, Railtel, right? So is it doing the same business which HBL or Carnex are doing, or is it different? As it is also part of communications, right? Maintaining the networks and all.
So HBL and Kernex and all others are not in the communication space, right? They are more in the calculation, in overall train management. Railtel is more about maintaining the uh, telecom connectivity for the railways.
Okay.
Right? So setting up their towers or the connectivity, between stations, between multiple zones, etc. That is what RailTel does. So there's no convergence between what Arnex, etc., HBL are doing versus what RailTel is doing. Coming back to your first question in terms of how companies manage their margins, I think it's when they are doing the tendering, in the tendering process itself, uh, they, because they've been doing this for so long, they have a reasonable idea of how much it is going to cost, and then they have that cost plus kind of methodology when they are bidding. And that is how, so they go in with the idea of how much margins they are going to make in a particular project, and it's something that it's not an unknown thing that they are getting into. Right? It's not that you are manufacturing something and you don't know what price you will be able to sell it at. You already, once you are getting a tender, you already, you have bid for it. You know what margins you are going to make. How much you end up making is going to be dependent on raw material cost, how you are able to manage your cost structure, etc.
Also, Dada, I'd like to mention here that in certain tenders which are very raw material intensive, therein they have an inbuilt price variation clause also.
Yeah, yeah. So that is, see, these are
So,
standard clauses for any contract, right? Not only in railways, any contract, whether it is private, public, whatever, you will, if say raw materials is 80-90% of what you are doing, right, you will have a pass through mechanism beyond a certain point, because nobody expects that if your raw material price goes from 100 to 200, that if you had told me that you will sell me something at 120 and your raw material cost was 100, if raw material goes from 100 to 150, nobody will expect that you will continue to do it. You will just, what is the worst that will happen? If I force you to do it, you will just stop your work and go away. Or you might use then substandard products, or you delay the project, etc. So a lot of those things will come in. Even delays here in tenders, they will have penalties, etc., back arrangements. So the contracting process, I think, is very standardized, steady state over many years.
So, Dada, before we take the next set of questions, I think we are fortunate to be joined here by Prakash Mandot. He is the president of Bangalore Metro and also the ex-member of Zonal Railways for South and Southwestern Railways. So, Prakash ji, if you are here, can you also just give us an idea? How do you see the BMRC project planning out? And if you are there still in the meeting, Prakash ji Mandot.
So let me see if he's here. And
Yeah.
he's there, but I'm not able to unmute. 1 second, sir. Huh.
He's there. Huh?
No, I'm able to see sir, but I'm not able to unmute him.
Oh, I think it's locked.
But I'm able to unmute Kamal, na, so I should be able to unmute him.
Namaskar.
Ah.
Yes.
Namaskar.
Namaskar, sir. Thanks for
First,
joining.
it was by chance I got this Zoom link. Today, Sunday, and every Sunday we do vaccination camps. I'm in the vaccination camp at present. So, so I told my team to be away for about few minutes. So as I started listening, my interest got more. So I said, "Give me some hours so that I can listen." For the last 27 years, I've been working for the development of railways for Karnataka, Bangalore, now in India also. I'm also associated with BMRCL. In fact, now we are, the proposals have gone for phase three. Phase three, a total of about 70 kilometers. So it has gone to Minister of Urban Development as it is awarded, or if they sanction it, BMRCL will take forward. Present, we have got about 50 kilometers of track. We have got 2 lines, purple and green. So, in terms of, we are happy that our transportation problems are eased now. We are waiting for the third phase where we connect the outer ring roads, outer of Bangalore. So, BMRCL, Government of Karnataka, and BMRCL are working for the phase third. So, I can assure you that a lot of companies are here, can work with BMRCL. They're really, they've got a very good team. They're experienced officers. Even Government of Karnataka and Government of India are supporting metro because Bangalore has got a lot of traffic problems. To ease out, BMRCL is working. One, we are also the airport line. They started the work. So, Bangalore International Airport, another 1 month or 2 months, will hand over. They will confirm the starting of the work from the airport side. Airport side, which comes from the, because they have already planned a multi-transport hub. So what, I'm also a director in the Federation of Karnataka Chamber of Commerce and Industry. The chairman infrastructure, I had suggested both metro and suburban rail should touch, should think from inside, not from outside. You got an airport which is passing towards outside. So both have been agreed. Mr. Hari Marar, CEO, we have had a lot of meetings. They have given permission for both. On the left-hand side, suburban rail will pass. On the right-hand side, metro will pass. So they have given space for both the local transport. So suburban rail also they're at the awarding stage. The drawings have been they vetted both suburban K-Ride and Ministry of Railways. So in a short time, tenders will be floated, so companies can take the opportunity.
So thank you so much, sir, for joining and giving us this wonderful sort of update. And I travel to Bangalore very frequently, and yes, without the metro, I think things would have been much worse. And I think most people in Bangalore are praying that the metro work gets more extended, and there is more connectivity there, because then it makes life a little bit simpler for them.
In fact, we had a yatra. See, our association main aim is use public transport. Also recommend government to sanction, connect more of the city metro and the 2 tier 3 side city suburban rail. In fact, 2019, for 1 month, I was very active. First phase is sanctioned 141.8 kilometers, but I have got it extended to 360 kilometers. Government of Karnataka has sanctioned 5 proposals, extension of corridors. Corridors which are extended by Government of Karnataka is from Hidalge to Hosur, from Bangarpet to Whitefield, from Solan Devlin to Vasant Narsupura, where SZ is coming. Japanese are investing a lot. That is a SEZ. Other side is Ramnagara, from Kengeri to Ramnagara, and Rajan Kunte to Doddapura. These extensions will come in second phase, but I have already got it sanctioned. And airport corridor was also as optional. When I had met Ashwini Lohanaji and Piyush Goyalji, then GM SWR, Chief Secretary, and ACC, ACS UDD, they were very interested. They said Bangalore has got about 18 industrial hubs. If your suburban rail is only intracity, it will not be of much use. They have extended my proposal. So tier 3 tier cities also have been. This will come only in second phase. I've been very active. Yesterday, I had a run. I was on board of Vande Bharat Express also. I enjoyed from Bangalore city to SR Whitefield. I had traveled. It was a good experience. I had opportunity to become Prime Minister of India. I was in the lineup. Welcome in Bangalore in railway station.
Wonderful, wonderful, sir.
I'm also working for projects of Rajasthan. Two projects. Now they are also planning to convert Marwad Mawali, because I'm a Rajasthani Jain. I belong to Rajasthan. I'm putting my efforts on Rajasthan also. Shortly, this Marwad Mawali was freezed. I got it defreezed. So now we'll be taking up Mawali to Devgarh Madaria first phase. This is what we have requested Ashwini Vaishnavji. At least let the work start. So there is a issue of forest clearance, because when you go to Marwad, it passes through wildlife sanctuary. So it is difficulty in getting permission. You're not even allowed to have a drone survey. So this also is an opportunity for you, for people, companies. Shortly, I think in this budget, we may sanction Nathdwara to Devgarh Madaria. And the other part they may keep as a heritage track from Kanli Ghat to Marwad Junction. So I also asked one more additional line, a detour line, Devgarh Madaria to, which is near to Gyawar. That is also advanced stage. Final location survey has been ordered. The sanctioned final location survey. Maybe in 1 month they may NWR may submit the FLS. So even that is an opportunity for all companies.
So yeah, thank you, Prakashji, for giving us these updates. I mean, I am also a Jain and I belong to the Terapanthi professional forum. So, I mean, this was the exact reason. I mean, why we chose this topic right now. I mean, railways has always been a large part of the budget share, but now we are actually seeing this sort of an execution momentum, right? And the other thing, I mean, the slide of metros that we put out, you'll see, I mean, the metro route kilometer is also going to be doubled. I mean, those are already proposed, those are already approved projects, and another additional 1370 kilometers is already proposed. And the line which you mentioned about Rajasthan, I think Jaipur Metro is under Jaipur Metro, right?
No, it is under NWR. This is
NWR, okay.
projects.
Okay.
Gauge conversion.
Okay. Thank you, Prakashji. Thank you for those updates. Back to you.
Okay, thank you, sir. Thanks for joining. This is wonderful. Suddenly, any other questions from anyone?
I mean, we have missed. So, I mean, this is now an open forum. I mean, whoever wants to take up, I mean, you can raise your hands or like.
Or instead of that, best is to put it on the chat. Then we'll not spend time muting all that.
Yeah, Nirvan Laha is there. I mean, he has asked a question. Titagarh has 15 to 16% EBITDA margins in 2012-13. I mean, it had 15 to 16%. Do you see such margins coming back in this capex cycle?
Okay, so let's go to Titagarh Wagons. So basically, our operating margins are here. This one. So 15-16, I can see it's pretty miserable. This is Titagarh Wagons, I think, right? So basically it was 15-16% in 10, 11, 12. Went down, struggled a lot, and now is around that 5-6%. Even if it does not go to 15-16, even if it goes to 10%, even then it means you will see a significant amount of jump in profits.
I think the metro coaches which they are doing, those will bring in some better margins rather than the wagon space. And the other thing is that they haven't tie up with ABB for the IGBT based propulsion system. So the new, I mean, the electric locomotives which are there, those will be fitted with a different kind of a propulsion system, and that will be a much more, I mean, faster cash generating business segment for them. So that would be something to
Yeah,
look out.
but margins will not go up substantially. It will see, the whole idea is that ultimately it will remain in around this zone of 8 to 10, 12%. Best case it will go slightly up, because no matter what technology you bring in or what kind of stuff you do, these are competitive projects. Lot of people are there. You don't have a lot of control over raw material prices, etc. So it's not that you are doing something which is significantly better or different from others. So the point I'm trying to make is ultimately it will be based on kind of sales momentum that you have. Also the kind slightly project to project, different kinds of work will slightly vary, but it will not be that one type of wagons you are making is 10% and the other type you are making is 50%. So what was the other, any other question? Okay, I think there is one question which is saying that since it is B2G business, should we look at direct participants or ancillary players? You could do both. You could look at direct participants. You could look at ancillary players who are in the private sector. So that's why I have included a few which are in the private sector, who are either directly or indirectly. You could look at for example, companies like Timken, or companies like who else is there? Bearing companies, etc. That are indirectly related to or feeding into these companies, bearing companies and other engineering companies that work on these areas. Definitely, that's something that you can look at. So Aniket has a question: which company has huge barriers of entry based on technical know-how in railways? I think of the companies that we discussed, HBL has some barriers, Carnex has some barriers because of the licensing thing. Other than that, it's not that, see, even the wagon making space, it's not that people have barriers to entry. It's not that, tomorrow you cannot start a company which will create or which will build wagons. The problem is that the entire process of getting enlisted with railways, getting the technology, building this product, and then selling it to them, participating in the tenders, etc. It's not an easy process. So people who are well entrenched. Now look at it from the other side. If I am the railway, I'm the railway board, and I have to sanction a tender, and I have an option to give it one to a company where uh, they have a track record of the last 20-25 years versus somebody who's just starting off. Most of the time you will not qualify technically also, so those kinds of things are always going to be there. So uh, it's a chicken and egg kind of thing. I mean, it's slightly nuanced. It's not that there is huge entry barriers in terms of technology, that okay, there are others who cannot even make it, but the entry barrier is more in terms of process, more in terms of your ability to get the order and then deliver. So it's unlikely that in the next 5 years you will find new company which is coming up and doing what some of these established players are doing. If that answers your question. Okay. Okay. So one contra question is from Urmil. RITES is in consultancy, high margin business with projected real capex so high. Then how come a company RITES is not finding in takers in terms of price volume action? Okay, is market not convinced on the speed and or execution? See, the market conviction when it will come, you don't know. Till 2-3 months back, nobody was convinced about the PSU banks. Then in 1 or 1.5 months, you had 40-50% rallies in PSU banks. 2 months back, were people not convinced that PSU banks will do well? When they will when price value action will come is a different ball game altogether. So that is why you have to wear different hats. Your long-term investing hat is slightly going to be different from your uh, your technical based investing versus your momentum. So the ethos or the thought process is going to be different. Here we are trying to look at the space. We are trying to look at what kind of companies will have a better opportunity in the future. Whether price action will come or not is a difficult ball game to understand. If you are more a techno funda guy, then what you should do is study these companies, keep them on your radar. As and when you find them, breaking out, you can buy them. That's another approach. The next question I think is from Sogato Mukherjee. Recently, Hindalco developed aluminium wagons from carrying coal to their factory. Aluminium is light, hence savings operating cost. Do we know whether this is being industrialized for wagons or coaches? Right now, I have not heard of anything. I've read this news uh, about the aluminium coaches. It's definitely lighter, I think more durable, etc. My guess is it would be slightly more expensive as well. So I don't have the answer whether they are being industrialized for wagons or coaches right now. Anyway, I mean these things take time. So even if it happens, it will take a few years for things to get rolled out. Uh, Next question is from Anup. Considering huge capex and opex for IR for next 5 to 10 years, most of the financing is done by IRFC. Is it fair to give complete miss to IRFC compared with other financing arms in the market? Uh, that's an interesting question. So if I go and look at say IRFC, okay, the first thing that we should be looking at is look at their balance sheet. So looking at their balance sheet is okay, their profit growth has been numbers are fairly reasonable. Numbers are fairly reasonable. So yeah, I mean I don't have personally any likes or dislikes, but from my understanding or way I think is it's always better to be conservative in terms of financials. Here you have uh, so one advantage here. I'm just trying to think through this now. Is your parent and the guy you are selling to, their parent is the same. So you're basically selling to your sibling, right? So nothing really bad is likely to happen, uh, in all likelihood, right? That is one. The other is that it opens up a lot for other interventions to happen. I mean, nobody is going to stop a railway company to go and borrow from SBI or a PNB, uh, or those kinds of banks. So I am not very certain that the most, uh, just going back there, what was the balance sheet size? I forgot. Okay. So they have total, assets roughly, 4.5 lakh, 4.5 lakh crores. Let's compare that to say an SBI. So SBI is roughly 10 times their size. So for large projects, whether IRFC will have the funding to itself do it, I'm not very convinced. Yeah, definitely worth taking a look, but I would probably like to stay away from it. Okay, next is from Vivek. Do you
I think
think?
the point on IRFC, the kind of ROE that they are making, and if you just do a DuPont analysis, I mean, they are doing return on assets of about 1.4%. So
इधर है ना एक
from,
minute.
from that perspective, I mean, if someone wants to play, and then again, like you said, I mean, it's like doing business with your siblings. So government matlab takes out money from one of their pockets, puts it into another, and then it's a dividend yield kind of a play. So I mean, if you're
So
interested,
here your return on assets is point. This is what's SBI. So not SBI. We are looking at this thing. Return on assets it's 1.5, and your dividend yield is 5. So dividend yield is good. So that is one definite advantage you have here. That will put somewhat of a floor to the stock, and then you basically see if the growth comes through in terms of. But my point is simply that I'm not very convinced of investing in a mono line business where the organization is lending to only uh, one set of customers. And secondly, the private players will may or may not go to IRFCs. They will go to your other larger banks. Could be PSU. In fact, PSU banks would actually benefit because a large part of this capex from private companies will probably get funded by the large PSU banks. Okay. So Vivek has a question. Do you think collections is a big problem when you are working with the government? Not really. I think most of these are tender-based projects, so it's not that you will not get paid. Sometimes there are delays, uh, but it's very unlikely that you will not get paid at all. Question from Aniket. I think that we've already discussed that. Pratyush, the question is which part of railways tender gets maximum margins? Rail line, wagons, signaling systems. I think if you go and look at the margins of across the companies, you will find that they are roughly all of them are in that 10 to 15, maximum 18% kind of ballpark. So that is true for any large infrastructure kind of business where if uh, the person or the entity who's giving you that business is the person who's driving the industry, why would he let you in a competitive industry, why would he let you make obscene amount of margins? So it's basically large projects with that 10-15% margin. Who is looking after the electrification of Indian railways? There's no one entity. I think part of it is done by RVNL, part of it is done by uh, I think IRCON,
KEC is a very
KEC,
good KEC has, I
KEC.
mean, electrified, I think 40%. It's mentioned in
Yeah,
our presentation.
correct. So
40%.
all of these guys are into bits and pieces different segments, different zones. All of these guys are doing this. Next question is on HPL revenue contribution from segments. They have a major revenue from telecom. Are we seeing a tilt towards railways? So telecoms basically they were battery providers, right? So what is happening is their railways is one of their major growth areas. So increasingly you will see that it will railways the percentage is going to go up. I think if my memory is not very strong, but I think they've moved from 12% to about 24% in the last 1.5 years or 2 years uh, in railways. Then what is the next question? We have an idea what kind of order segregation different kind of wagons. I am not sure what this question means. Margins we've already talked about.
So there are different types of wagons. I think, I mean, box NL type of wagons, BTPN, box HNL.
Yeah.
These are different types of wagons, and I mean, we don't have the exact numbers for what is the different, I mean, segregation for those types. But I mean, उसपे भी मतलब there
No,
won't be a many
so
margin
yeah. So
difference.
the point is that there is no point in getting
Yeah, getting into those numbers.
into those numbers because you will not learn incrementally anything more. One, art of doing analysis is to know when to stop digging deeper because there is no end to digging deeper. Problem is, again, this is not what I am saying. This is something which Seth Klarman had said. Pareto's principle work here. 80% of your understanding comes from 20% of the data. If you are able to understand the broad 20%, that will give you 80% of insights. The remaining is not that important. You will, if you keep digging deeper and deeper, you might get something or you might not get anything. The point here is there may be 10 different types of wagons. Ultimately, whatever you make, you are going to make the same margin, right? You are going to, apply it at as part of the overall, overall set of deliverables. So there's nothing incrementally more to learn about by differentiating those numbers. Some thoughts on electrification on Indian Railways. There's nothing to think about it. It's an ongoing process. We should be complete in the next 1 or 2 years. I think we are already around 82% as per last month of all broad gauge trains. Next 2 years, I think the plan is to get to 100%. Nothing, no great incremental benefit that is going to come from electrification. Who is looking after the video monitoring system of the railway stations? I have no clue. I have no clue. Video monitoring system means what?
I think it is for the CCTVs. A lot of
Okay,
tenders for CCTV.
Okay. So CCTV etc. is managed at the. So the image that I showed you, right? So if you look at that, there's a central processing at every zone, and they monitor it remotely. Which company? There's no company as such which is contracted to do it. It's being done by the railway ministry themselves. If I'm not mistaken, I could be wrong. Okay, Econ. Pramesh has put in some data. Fitting in a rectangle where breaks is resistance of 50, then rate very high. Why market not giving its value? I have no idea why market is not giving its value. You will have to figure. I mean, why market is not doing something is not something that I and you can figure out. Honestly speaking, you have to create your view on the company, whether you like it or not, either fundamentally or technically or both, and then you have to take a call. Not all calls will be right. Right? You have to decide. Okay, so SKF, yeah, where SKF is another beneficiary of, like I said, Timken, SKF, NRB, of these companies. Can you throw some light on the business model of RITES? Yeah, so RITES is a very simple consulting project management business. So if I have to create, let's say, a new station or a new platform, what I will do is, I as in the Indian Railways, what I will do is I will call RITES. I will tell them that, boss, come here. I want to create this platform. So now go and figure out what needs to be done. So then they will go do a feasibility analysis, create a report, what is the requirement, right? And then I will take all of that, I will float a tender. And once I get the tender, I will allocate it to, I will give it to somebody to execute. Now let's say I give it to company X. So then I say that, okay, company X, you will do it. The project oversight will be done by RITES. So RITES will have a set of project managers who will go and keep checking if the work is being done on time, with quality, on schedule, etc. After the work is done, I will tell my RITES guys that, was now go and quality inspection and certify. This is up to the standard that was expected. So then they will go and check and certify. That is, in a broad shell, what primarily RITES does. Other than that, they do chutka-mutka things here and there in terms of leasing, wagons, rolling stock, all of those things. But primarily, their business is management consultancy. How do you see Frontier Springs as a proxy? I have no clue. I have not studied Frontier Springs, so I'd have to take a look at it. I'll definitely take a look at it and come back. Okay, let's see what else is there. So I think there's a follow-up question from Prathamesh on IRCON, which is okay. No, so it's the same question. Okay. So okay, nice, interesting question from Abhishek Bhaumik. Do you see this as a short cyclical tactical allocation, or it's a much longer term play? Personally, this is a cyclical play. This is not something that you will buy and forget for the next 10-20 years. It is going to be a cyclical play. You will have to get in, you have to get out. Then, 1 year, 2 year, 3 years, whatever is that time frame when this cycle sort of comes to a peak. It's not a kind of stock, or this is not a kind of a sector that you will buy and hold for many years. Okay.
Anand Mehta has raised his hand. I mean, if
Yeah. Well, I've seen that. I'm just trying to scroll through the chat and see if there's anything else. Twitter. Yeah, so the the Firma business for Titagarh, they've divested a part of it. Is turnaround on the cusp? That's the $1 million question. The turnaround has been on the cusp for many years. Turnaround has been difficult. So if I look at the P&L, if you see, it's been like sort of stuck at this range of 1700-1800 crores for the last 5 years. Yeah, hopefully, if as and when this traction continues of orders, and so what happens in this kind of a cyclical play is, suddenly you will get a lot of these orders, and you will be able to clean up a lot of your older balance sheet, etc., etc. Right? A lot of your older past problems get washed away, and then it opens you up for uh, making newer mistakes. Right? That is the nature of how these cyclicals work. So right now, I don't know whether when the turnaround is going to happen. I am hoping or thinking that with the kind of order book traction that is there, it should happen in this cycle itself. Okay, Rahil, HBL revenue from railways would be. Uh, I think it was there in the presentation. If I remember correctly, it is about 20 or 22% from railways. If I remember correctly. Let's just quickly see. Uh,
They don't have the exact numbers from how much exactly from railways, because I mean some part of railway batteries also they may
yeah,
be doing
yeah,
the
they are doing
electronics.
that. I think
In
in
the
their balance sheet, in their annual report, they mention. Give me 1 second. I will tell you. So this is the one that I had. Where is that? It was there in the first slide.
So 10% from electronics, I mean, is it in the TCS
Ah.
opportunity? So that is
So
what
railway electronics is 10% of the revenues, and batteries also some part goes into this thing into railways. Okay. If you see, that is how the spread is. Okay. Uh, yeah. So Gaurav, there will be a recording of this available. Harish, Gateway Distripark is it a beneficiary of capex or will it get benefited after capex is implemented? Probably after a large part of the capex is implemented. Are the tenders for consulting PM of rights competitive? If so, which other players are there in the listed space? Tenders are always competitive. Most of the time, what I have seen is it goes to rights. Uh, uh, okay. TCAS will be high margin or low margin. TCAS margins are again, I think, in the similar ballpark that we had earlier. Okay. Let me quickly scroll through because I think we are now coming close to 2 hours and we'll have to close, otherwise people will get tired and drop off. So Carnex versus HBL, why do you opt for HBL? Two reasons. One is balance sheet of Carnex is not very strong. HBL is much better. Second is that HBL has two distinct parts of the business. One which caters to the railways, others which caters to primarily to defense, data centers, etc. So both these industries have tailwinds at this point in time. Hence, slight uh, partiality towards HPL right now. Right, Circon also involved in metro. Yes, yes. In cyclical, generally most poor balance sheet players get higher returns. Not necessarily. They sometimes get high returns. Sometimes they get also blown out. It depends on what kind of cyclical you are picking up. But which is weakest balance sheet? I think Carnex has a weak balance sheet. Most of the PSU balance sheets are reasonably strong. So nothing. So first of all, I am personally averse to buying stocks unless it's a techno fund or a quant kind of bet. When I'm doing long term kind of investing, I'm not very comfortable buying companies with poor balance sheets because then you open yourself up to a lot of other problems. I'm happy to let go a little bit of returns possible, but tend to remain towards better quality companies. Okay. So anyone had their hand up or anything like that? One second, am I missing anything?
I think
Yes.
Yash asked a question. Concor, any view on Concor? We're doing.
Concor, I think they are going to. You see, the main story in Concor right now is about the divestment. A lot of land, sort of monopoly business. Uh, and will there be growth in there? I not seen much of growth coming through. And India is a market which values growth. Right? So that's slightly dicey. I think most of the story in Concor is about the divestment. Okay. I think it's 2 minutes to 12 noon, and been at it for 2 hours. I think then let's close this. I will put up the recording and the presentation, etc. I'll share it with all the people who've signed up. Thank you all for joining. If you have any more questions, feel free to write to me. I'll try my best to answer. And thanks again for joining.